and welcome to this week's edition of Conquering Retirement. I'm your host, Kristin Oakley, and joining me in the studio are two financial advisors from Northern Alliance Financial serving the great state of Maine. We have Peter Hanson and 𝗬𝗏. We've got a great show for you today. The title of today's show is Refinancing Your Retirement. What does that even mean, and what could it mean for you? Derek and Peter, I'm excited to have this conversation with you. How are you this week?
I'm doing great.
Good.
It's good to be here. This is a very pertinent conversation given where rates are right now.
It is. So yes, that was going to be my first question for you all. You know, typically when people hear the term refinance, you might think of refinancing your home or your car. And typically folks want to do that when we're in a lower interest rate environment. But recently we've been in a much higher interest rate environment. So my first question is, what does this term refinance your retirement even mean?
Yeah, well, you know, most of what we do is revolved around education, from our workshops to this radio show, to TV show, to our radio show. The education around refinancing your retirement has to do with, obviously, with interest rates, like you mentioned. But people don't think of it. This has to be brought to them and shown, you know, what exactly what we're talking about. So when rates are high, you know, there's ways to take advantage of it. Let's say that you have an annuity, okay? Chances are you bought that annuity when rates were lower. A lot of the bonuses, a lot of the benefits, and a lot of the rates that are set when you purchase an annuity stick with that annuity. But now rates are considerably higher. So if in fact, one example of refinancing your retirement is if you have an annuity, it's time to take a second look. You know, we've been calling a lot of folks in which we've helped them out with an annuity as a portion of their retirement plan, having them come back in to see if it's still in their best interest because of where rates are. You know, it might make sense to replace that annuity and or change some benefits on their existing one, but more than likely it probably might involve a replacement. And now the rates in which they purchase now the market's high, will continue on even if the rates start to drop again, which I think is going to happen.
Yes, so this makes it a really time-sensitive conversation because to your point, let's say someone has an existing annuity contract, it was a lower rate. If they were to go ahead and transition to a new annuity, they can lock in that higher rate so that when rates drop, they still get the higher rate.
That's exactly right.
Yeah, and it you know, with annuity contracts, and that's one way, but it's a lot of guaranteed type products that are going to be able to take advantage of this higher rate environment. Some folks are already doing it themselves with CDs, okay? And it's the same sort of thing, okay? The annuities, I always say, are like a CD on steroids. It's got much more capable benefits. You know, with the CDs, I think you're getting maybe 4% now, maybe. And you can certainly average more than that in some of the annuity contracts these days. But it's just about looking at your situation and seeing, are you still in the best spot possible? And are there some things that we can do to help you to benefit, you know, where we are right now? And in this interest rate environment, although interest rates being high has a negative effect on a lot of other areas, there is one positive effect there.
Yes, for sure. And I think that's important to note because a lot of people don't think favorably about the higher interest rate environment, but there's an opportunity that exists here.
Right, exactly. Derek mentioned CDs. That's a natural go-to that people will think of. But it's almost that they're almost doing that because they're scared. Now, if you go to the bank right now, and let's say you were able to get 5 or 4%, you would get a lower rate if, in fact, you took out a longer annuity. And the reason being is because we know, the Fed knows that the banks know the Fed's going to lower interest rates.
Right.
However, a better approach, it would actually be, if you're a candidate for a CD, you're probably a candidate for an annuity.
Right.
It's a better option if, in fact, you're retired or retiring.
Because those bank CD rates are short-term.
That's a short-term product, yeah.
There's also money market accounts now that are earning 5%, and that's a much better place if you have emergency savings, for example. Stick it in there and take advantage of those dividends, right?
Yeah. And also, you know, for the folks that are watching, you know, the advisors here at Northern Alliance Financial are all duly licensed. We carry our fiduciary license, which we all carry, Series 6.5, and we're also insurance licensed. Sometimes it's a mix of products that makes the most sense.
Right.
But we want to make sure that we have access to anything and everything, so we can put together a plan that's specific for, you know, for our clients. And so we all take this approach, and we all take our fiduciary license very seriously. And you know, refinancing, it just makes sense with a lot of folks. And so, like Pete said, we have been reaching out proactively to some folks where we said, listen, you know, we have you in these products, 3 or 4 years have gone by. We're able to lock you in at a higher rate. And in a lot of instances, they're actually in a much better situation right from day one by doing so. So it's a win-win.
Right. Well, and the time is now, right?
Yeah.
Because we know that rates are probably going to come down at some point this year. Again, no one has a crystal ball, but what would you say to someone who's like, I haven't even thought about this before. I'm not sure if refinancing my retirement could be right for me. What would you say to them?
We'd say, why don't you give a call and book an appointment to come in? We mentioned the A word, right, which is annuity. And that carries both good positive connotations and bad connotations. But there's also different types of annuities. There's variable annuities. There's fixed annuities. There's fixed index annuities. The type of product that we're partial to would be the fixed indexed annuity. It's a little bit different. I would say if anybody has a variable annuity, give us a call, regardless of rates are.
Right.
I'm not a fan of the variable annuities. I haven't found one that takes care of the client the way that that they're sold. Now would be a great opportunity to come on in, set an appointment so that we could show you through the Morningstar report, that portfolio X-ray, exactly what's going on inside that product. And if you're still a candidate for an annuity, we can replace that with a different type.
Yeah. And is there any kind of tax implication if someone's looking to refi and switch out an annuity? How does that process work?
Yeah, so there isn't. And, depending on the type of annuity, whether it's a qualified pre-tax or non-qualified after-tax, with a qualified, it would be a transfer, so it would not be a taxable situation. And for a non-qualified, we would be doing what's called a 1035 exchange. So we would be exchanging. It's another way to transfer it. That's the terminology that's used, but there would be no tax implications.
Right.
And we certainly are not doing our job properly if we're not taking the tax considerations or the tax implications into consideration.
Yeah,
and so,
for sure.
there are no tax implications for doing these.
That's important to know.
Yeah.
And just real quick, because you highlighted variable annuities, I've never been a fan either. I used to travel nationwide and kind of present on some of the challenges of them. One being they typically have really high fees. A lot of folks have no idea how much they're currently paying in fees. And often there's a huge commission attached when they're being sold. So sometimes those products are being pushed even if they're not, in fact, in the client's best interest.
And a trail commission as well. So that's why the fees are ongoing. And
Right.
Yeah.
Whereas fixed index annuities typically don't have those, right?
They don't have the trail commissions, but as well, the fees, there might be a fee. There's some no fee, but the fees that the annuities that we're working with are very low fee, and it just doesn't have that negative connotation. And it's not subject to market downturn, which is the most important thing.
Yes,
Which is why we would work it into our portfolios with our clients. We're all about risk mitigation. That's what we do. We deal with folks that are retired or retiring that can't afford a 20%, 40% market downturn like what we saw the S&P did in 2008.
Yep. Well, now is the time to take a serious look at it, right?
Yeah.
For sure. And I know you'll do that as part of this complimentary written financial plan.
Absolutely. And for the folks that are watching today, if you are looking for a second opinion or a plan, give us a call. If you have an annuity, it may be a variable annuity, and you want us to run through and look at the fees, we're happy to do that. I can say that we have had many folks come in with variable annuities thinking they were not paying much in the way of fees, and I've been able to show them 4 or 5% sometimes. The average, I would say, is between 3 and 4 in some of these products, which is too much. When you can do the same thing in another product that doesn't have fees anywhere close to that. So give us a call. We're happy to go through that with you, do our education and due diligence to be able to look and see what is in your best interest. And so we're happy to do a fee report. That's part of every consultation.
Wonderful. Derek, Peter, thank you so much. I'm excited to get into more on today's show. But if any of this is resonating with you, you've got nothing to lose. Now is the time to look at these products, see if there could be a better situation for you. So if you're interested in coming in and getting that second opinion, we encourage you to pick up the phone and call 877-241-7430. Or if you'd rather connect online, we've got you covered. Simply pull out your smartphone, and if you open up that camera app, you can point, click, and scan that QR code that you see there down in the bottom right-hand corner of your screen. That will take you over to a landing page, ask you a few short, simple questions, and then a member of the team from Northern Alliance Financial will reach out to connect with you to schedule your complimentary meeting that way as well. Don't go anywhere. We've got a lot more to cover today on Conquering Retirement right after this.
Our team at Northern Alliance is very diverse in terms of the services that we offer.
We do take a team-based approach.
We carry multiple licenses so that clients can do everything within the Northern Alliance Financial team.
If it has anything to do with retirement, that's what we specialize in.
Budget planning, tax considerations, Social Security strategies, risk management, long-term care, Medicare, health planning, as well as legal and estate planning.
We really are a one-stop shop.
There's Lance Gilman, Peter Hanson, Jeremy Barnard, myself. We do have a staff that is great.
In Maine, we have multiple locations to cover the vast array of the state.
You know, you can come in and have a conversation in person, and a lot of people are looking for these days. Things after COVID have changed to more Zoom, phone call sort of things, and we'll do those things, but we appreciate and would rather have you come in person and have a conversation face to face like this.
We're pretty approachable, and we're going to listen to you. We're going to try to determine what your needs, your aspirations, those goals are, and then we're going to do everything that we possibly can to help you meet those goals.
It's lighthearted, it's carefree. We laugh like crazy. An atmosphere that I don't think is common in a lot of other practices.
We were talking about how well the team is bonding together, how similarly we all think in that what we do, we want to actually make a difference.
Average, everyday people helping average, everyday people.
You know, we truly do put the client first.
Our mantra has been, when you take care of people, people take care of you.
Welcome back, Maine. You're watching Conquering Retirement. I'm your host, Kristin Oakley, here with both Peter Hanson and Derek Hewitt from Northern Alliance Financial. A great conversation we've been having today, all about refinancing your retirement. What does that mean, and what could it mean for you? And just if we can represent, maybe some folks are just joining us, what we're actually meaning when we say that phrase, refinance your retirement.
Yeah, refinancing your retirement is taking advantage of the current interest rates. We all know about when interest rates are low, people will refi their credit card, they'll refi their debt, they'll refi their mortgage.
Right.
But when interest rates are high, that's a great opportunity to refi your fixed income, to refi your retirement. You don't have income coming in anymore. Now that rates are high, there's things that you can do, especially if you have a fixed product like a fixed indexed annuity that can be looked at. It might make sense to go ahead and change it into a different product, because what the rates are when you purchase that product, stick with that product for the majority, for the life of the product.
Right.
We know rates are going to drop.
Yeah, for sure. And this is why it's such a time-sensitive conversation. I know you said you've been proactively reaching out, even with existing clients. You've had, people come in who are newer to you, who've had annuity contracts, and they want you to review them. Any good stories come to mind of walking someone through this process of refinancing their retirement?
Sure. Yeah. Well, actually, this is more specific about somebody who's come in and had a variable annuity and was not aware of the fees that were associated with it.
Which is so common.
Which is always the case, usually. Because it was recommended, they trust the advisor that recommended it.
Right.
And, and I can't often tell them why that advisor recommended it or not. I don't know, but I can just tell them where they are. And we do our due diligence. So the first appointment, this gentleman came in, and we ran a fee report, did our whole portfolio analysis. On the second appointment, I actually went through, I printed up a prospectus of his current variable annuity. I was able to point out a little over 4% in fees. Now, he was taking the income. So the fees, he didn't notice it because he was guaranteed a certain income and he was receiving that income. But what I said is these fees in a down market is eating away at the cash there. So your family will get less if something were to happen. And most people don't look at that.
Right.
And
I was going to say you have to pay that fee even if you take a loss, right? Regardless.
Yeah. And it's, so with that situation, we were able to find another product that did not have fees anywhere close to that. So that one was around a little over 4%, I believe. The product we put them in and had a fee of 0.95.
Wow.
And was not variable to the market, meaning that, it wasn't going down with market downturns and able to give them a little bit more of an income. So that was a situation that had happened, and it's pretty common for these sort of things to happen. When folks come in with a variable annuity, they're not even sure if what they have is a variable annuity. So they just know it's what they have this income, and this is how it works, and there's a lot to it. So it's hard for them to understand really everything about it. So it's a little bit of education. It's a teaching moment for us. We want to go through step by step so people understand what they have.
For sure, for sure.
Even our current clients, Derek and I have been doing this for a good period of time. Sometimes people that we've sold an annuity to 5 years ago, at that time, that was the best product based on those current rates.
Right.
And it had the highest payout. Obviously, everything we're going to do is an A-rated carrier, and because we work with over 72 different carriers, we can pick and choose what makes the most sense. But it also means that they're already our client, and as a fiduciary, we're going to proactively reach out to them and say, hey, why don't you bring that product in, because we just ran an analysis and it looks like there may be something else that makes more sense at this time again, given where the rates are right now.
Right.
And we've done quite a few in the past couple of weeks, and we're going to continue. We're still going through the list. And people are, again, better off when they left us, because they're now in a product that was better than what they had before. And again, at the time, that was the best, but now that rates change, different products rise.
Yes. Yeah,
different
and
carriers.
because you're independent, you have all these different.
That's exactly what I was going to say.
Yeah, go for it. Yeah.
No, exactly. You nailed it. You know, we are independent, so we can really work for the client. And you know, there are many examples of other firms that are run in what's called a captive model, meaning that, you know, I use an example. If you go into your local bank and you want to buy this product or have them open up this account for you, they can do it. But they're only going to offer you the suite of products and services under their umbrella, under their
that
captive
brand,
model.
under that name.
Exactly.
Yes. Yeah.
You know, we're not cookie cutter. We're independent, and we really do put plans that are tailored specifically for the client. So we're able to really think outside the box oftentimes, and that really is beneficial, and it's something that a lot of folks aren't getting other places.
Because there's no one-size-fits-all strategy to this. It's very individualized, customized, and really what we're talking about when we're talking about refinancing your retirement is making your financial situation potentially even better. That's what it's all about, right? Because better is just better.
That's right. Yeah, without a doubt.
Yeah, better's better. I
think
agree.
that sums it up, right?
It's the American way. Everybody wants what's best.
Yes.
And as an American, I think you deserve what's best. But when you're searching for a financial planner, you want to find, like Derek mentioned in an earlier segment, that we're dual licensed, right? I mean, people will go to workshops put on by financial professionals. Maybe those financial professionals only have their life insurance license. And all that financial professional is able to offer is an annuity, right? Because that's the only retirement vehicle that they have access to.
Yeah.
We carry dual licenses. We have our Series 65, which of course is a securities license, and our life insurance license, which is what's required to sell an annuity. But now we can actually put the appropriate amount into each product. And not everybody's a candidate for an annuity, but for those that are, we're independent and we can go shopping for the client. And Derek mentioned that. That's the difference, is that we work for the client.
Yes.
We work as independent advisors under the name Northern Alliance Financial, but we're independent and we work for the client.
Yes.
Just like our Medicare brokers that we bring in. They represent the client, not an individual insurance carrier.
Right, and that's a huge, huge distinction. You know, you talked a lot about fees, which is so important because all three of us at this desk have heard horror stories, situations where folks just have had no idea how much they're paying in fees. I always recommend whenever someone's considering working with a financial professional, the way you want to phrase the question is, what is the total cost I will incur from working with you? Because a lot of times they'll just say their advisory fee, right? But they don't always disclose, or it's in the prospectus that most people never read, right? Because it's a real snooze fest. But in there, embedded in fine small print, all of a sudden there's all these different fees.
Could be a broker model where you're charging an advisory fee and you're making commissions, but you don't have to disclose the commissions. That is not the model that we work on. We're fiduciaries. And the other thing, too, is there are a lot of financial professionals that are running workshops, and they may recommend annuities and things, and they have no business doing that, not having the proper licensing to advise you to move your retirement funds into vehicles like that. There is a battle going on right now with the Department of Labor, and they're thinking of ways to do away with that. And so you really want to work with somebody who is duly licensed and who has your best interests in mind. You know, we're not a one-stop shop where we just are a cookie cutter, where we just, everything is right there and then we're going to offer it to you just like that. We're going to think outside the box, do the research, and that's why oftentimes it takes at least one appointment of education and research before we go over a plan with you. We need to take the time to do our due diligence.
Absolutely.
And that doesn't happen in 20 minutes.
Right. You know, I always say we are not cookies to be cut, right?
Yeah, that's what I say.
So if you would like that individualized, personalized advice based on your individual situation, this is why the team of Northern Alliance Financial are offering you the opportunity to receive your very own complimentary written financial plan. And as part of that, they're going to be able to do a fee finding report, see how much you are currently paying in fees. They're going to be able to look at your situation and see, is there any way that it can be better for you? So to take advantage of that, again, this is for no cost, no charge, no obligation. It's simply an invitation to have a conversation to see how they can help you. You can claim yours by calling that number on the bottom of your screen, 877-241-7430, or again, you're also welcome to scan that QR code and that will get you connected as well. We'll be back with more Conquering Retirement right after this.
When interest rates are low, you might be able to refinance your home, your car, even your credit cards. But when interest rates go up, it may make sense to refinance your retirement. Higher interest rates could provide income opportunities you may not even be aware of. What works for you in your portfolio during low interest rates may not work for you when interest rates are high. Find out if a retirement refi could work for you. Call today for your complimentary Refi Your Retirement.
Welcome back to Conquering Retirement. I'm Kristin Oakley here with both Peter Hanson and 𝗬𝗪, financial advisors from Northern Alliance Financial, serving the great state of Maine. We're so glad you're joining us today. You know, we mentioned before the break the complimentary written financial plan that you all are offering to our viewers. And when folks come in for that complimentary written financial plan, you also have another gift for them. Talk about that.
Yeah, so for those folks that come in for a complimentary financial plan, a consultation, we are offering our CEO's book. The CEO's name is Lance Gilman. He is a retired lieutenant colonel. He wrote this great book here, and we're offering that to folks who come in. It was written with this in mind, okay? He draws some comparisons to being in the battlefield as a retired lieutenant colonel and compares it to planning and contingency plans in retirement. So that book is for folks who come in. We're happy to give that to you. Maybe it can help educate you, because that's really what we're trying to do, is educate folks. The other thing, too, is for the folks that are watching, we are also offering workshops all over the state of Maine, okay? So there's too many to just go through right now, but just give us a call if you're just interested in attending one in your area. Most likely we have one coming up at some point in your area, and we're happy to put you on the list to get you there.
Wonderful. And those are completely complimentary as well, right?
Yeah. In addition to that, there's our website, nafinancialadvisors.com, where actually we have every one of these shows recorded. We don't have the radio shows up there yet, but they're due to come. And you can also look at the list of upcoming workshops.
Yes.
We've booked from September all the way through December for our upcoming workshops. So you can find all that. And our bios are there. Who are these guys? There's 6 of us. What do we do? What is our background? That's all there.
Right.
People can check us out, and we appreciate it when they do before they come in.
Absolutely.
We love it when they say, "Hey, we've seen you on TV." That's kind of fun. Or
it
we
is
heard you on the radio.
Right. They feel like they already know you all, right?
Kinda
Well,
like,
and I can attest to the fact of what you see on TV is what you're going to get in person, and you're going to really enjoy your time with the team of Northern Alliance Financial. Again, that website is nafinancialadvisors.com, so definitely check it out. Well, guys, I know one of the things that we need to talk about as well that's been in the news as of late is Social Security.
Right.
And I think a lot of folks are concerned and are asking the question, is Social Security going to be there for me? And we have a recent report, this was put together by the Board of Trustees for the Social Security Administration, that states that it appears the fund will be depleted earlier than expected. They are now estimating that the fund will remain solvent through 2033. What do you guys have to say about this?
Well, let's talk about what that means. So the Social Security and Trust Fund, when that becomes solvent in 2033, it means they're only going to be able to pay out 80% of the benefits. So that's an issue, especially more so for folks who are living entirely on Social Security.
Right.
They really can't do without 20% of the benefits. Is that going to happen? No. I'm sure they'll fix it, take from one pot and put it in another. It seems to be that they will usually take from one fund, put it in another, and then kick the can down the road.
Right.
Raise taxes. Raise payroll taxes, or the limit on payroll taxes could go up.
Yep.
They're going to have to come up with money. So for those folks that are, that are watching, they will have Social Security. It will be there for you then, I'm sure of it. I think for, someone that's younger, that's in 30, 40, 50 years old, it could be a completely different landscape at that point. It really could. But yeah, that just means that 80% of the benefits are going to be paid out. 20%, they don't have the money to pay out. So they only be able to pay out what comes in, and that equates to about 80%.
Right.
I personally can't imagine them cutting it.
No.
Saying we're going to give you 80 cents on every dollar that you're owed.
Yeah.
That's what they're saying they would have to do. But I think, like you mentioned, that they're going to end up raising taxes. But all the more reason to have a plan.
Yes.
And if whether you're younger or older, you're going to be affected by it if you're alive beyond 2035, which I would expect most people are. Like I have a son, he's turning 22 this summer, and I have a 17-year-old. We're not going to count on Social Security for them.
Right.
And in fact, when you're building your retirement plan, if you're young enough, you want to have the legs of the stool for your retirement portfolio that may incorporate Social Security, but you don't have to have it. Wouldn't it be great if, in fact, you could be a bit more self-sufficient?
Yes.
But more importantly, because we know something's going to be happening to that, you want to have a plan in place.
For sure.
Because what if there is a significant change to it? You're going to have to draw your assets from somewhere else. You're going to be able to rely on that benefit less. So that's why that's one of the reasons why we're doing this.
Right.
And we have to build in contingency plans for our current clients if, in fact, things change.
Right.
Because we're going to have to start drawing from different areas. Maybe be a little bit more safe. We don't want to take on more risk, but we're going to have to make sure that their money lasts. That's our promise.
Yeah. Well, and it's frustrating because you have worked hard and you've paid into that system. For me, I wish I could just say, can you just give me back what I've already put in, right? Wouldn't that be nice? But it doesn't work that way for sure.
Yeah. I mean, some people have the impression that the money that they're contributing that's coming out of their paycheck is set aside for them. It's not.
Nope.
They're taking that and they're paying out the current beneficiaries.
Right now.
I had that question. They said, well, aren't they putting it aside for me? They have a special account with your name on it. No, it's not
Nope.
how it works.
Nope.
It kind of sounds like a Ponzi scheme. If
That's
you
what I was going to
understand
say. Is what does that sound like?
how
It's
Social Security works.
Yeah.
They're taking the money from the current investor and giving it out to the
Yes.
newest clients, right?
Yeah. So when folks come in to have the Social Security timing conversation
Yeah.
with you, right? Obviously, it's an important piece of someone's retirement income puzzle. And I'm sure that there are some folks, there's probably one of two camps. You know, people say, oh, I want to wait till 70 because I want to get the maximum I possibly can. But some people are probably coming in going, I want to turn it on as soon as I hit 62 because I'm not sure it's going to be there.
Yeah.
How do you help folks navigate through all that?
Yeah, well, one of the benefits that we offer on that complimentary visit is what's called a Social Security report. We take into account, all we need is what's called your FRA, your full retirement age amount. For most people watching, that's probably going to be about age 67. But regardless, get your statement. If you don't have a statement, because they kind of stopped sending paper statements, go to www.ssa.gov, and you can open an account, and what we need is your FRA amount. We'll run a Social Security report for you, and it's in particular important for a married couple.
Yes.
Because there's still things that you can do. You can't file and suspend, and there's all sorts of things that went away in 2015. But we can still prove the fact that it might make sense for one to hold on for a little while and draw some assets from somewhere else and let this build up, especially if there's big age disparity between couples, you know, because the couple that dies first, if in fact that benefit's larger, it makes sense to hold off as long as possible if they're, like, let's say 9, 10 years older than the other spouse, because that turns into the survivorship benefit for the existing spouse.
Correct.
So that would be a good reason to delay.
Right, because if you're receiving 2 Social Security checks and one spouse passes away, you're going to lose one of those checks, but you get to keep the higher of the two, and that's the key.
So that would be a perfect example of doing some comprehensive planning that still exists.
Right.
Yeah. And so we run a Social Security report for everybody that comes in, should they have not filed yet.
Right. Yeah.
I think a lot of folks too, that, you know, if you are past your full retirement age, you get about an 8% increase each year up until 70. That's the benefit, and that is a good benefit. But the break-even point to where, you know, if you stay and collect at 67, say you live to, you know, 90, or you collect at 70 and live to 90, I think the break-even point is somewhere around 81, 82, where, you know, now if you waited till 70, about 81, 82, you have more money. But at that point, you know, you're probably doing less, and you probably, you know, you probably don't need the money as much as you would need it in the early years. So I'm not someone who thinks you should definitely wait till 70. But that situation that Pete mentioned with a younger spouse and the higher spouse, the older spouse being the higher earner, that would be a situation where I would certainly hold off, because that survivorship benefit is very important.
It's different for everybody.
Exactly.
Every case is different. People say, well, gosh, I heard I've earned it at 62, I'm eligible, let's take it. That's not always the case.
Exactly right. Well, it just proves that, like so much else in the area of personal finance, the answer is it depends. And if you want to find out the right answer for you, this is why the team of Northern Alliance Financial would love to be able to help you. That number to call for your complimentary written financial plan, 877-241-7430. We love you, Maine. We'll see you next time here on Conquering Retirement.